Hello and welcome to another episode of the Stock Market Today video. It's just Nielsen here. I'm going to be hosting for you today, and we're going to give you a recap of what's going on, what happened this week, and what to look forward to next week. To help me do that is Ed Carson, our news editor. Thanks a lot for joining us, Ed. It is December 5th, 2025, and what you got for us today?
Yeah, I'm pretty good when it comes to looking backward and talking what the market did rather than the other direction. I will be taking a look at.
Yes, okay.
Want to take a look at Penumbra, Vertiv, and JPMorgan.
Perfect. So we will take a look at those. And I mean, I have to admit, a lot of folks on IBD Live, our morning show, were saying that last week I was on vacation and they were wondering if there was maybe the Chris Gessel effect, that maybe, I need to go on vacation more. So if we can work on that, Ed, you got my back, right? Uh,
Yeah, I'd be all supportive of that. If that could make my portfolio go up, I'm happy to help out.
there you
Yeah,
go. Oh, and I am sharing the wrong market surge. I have two up. Let me share the correct one. I try and put a little green thing to make sure I'm on the right one,
I
but that did
understand
not
that.
happen this time. There we go. Okay, so the Nasdaq Composite finished about with a zero, you know, 0.3% gain. Again, as I said, it was last week that really got things going here. The S&P 500 was in a similar state. That was finished up about 0.2%. The Russell 2000 was a little disappointing today. That closed negative, but I mean it had a really great day yesterday. So it's too hard, a little bit hard to fault it too much for that, given the move yesterday. And the big thing is that a lot of these indexes are right near their all-time highs. So for as much as we've had in the Nasdaq and S&P 500, these major wallops like back here on October 10th, and then again here on November 20th, it just seems like the market has been recovering okay and continuing to go higher.
Yeah, I mean, it's been really, it was really, we've had a number of expectation breakers down and up, but this week was sort of steady. We just sort of kept on doing what we were doing, just at a slower pace. I think, if anything, the only thing that we could almost, the market might find a constructive, a pullback, so we could form more handles. But, we're all the indexes had modest gains. They're all moving towards highs. As you say, the Russell 2000 almost got there. RSP actually did get there today, backed off a
Hmm.
little bit, but it actually hit a record high. So that was showing the breadth. So the market is broad, the market is strong. There's a lot of stocks showing strength. And I was saying, like I was going to write, about the only downside is that there's more homework to do. Now you have to look at a whole bunch of sectors.
Yeah.
You can't just say, I'll take the Magnificent Seven and these 10 super high beta names. I mean, you could have done that for a while and you would have been okay for several months. I mean, but now you have more work. There's medicals, there's metals, there's retail, financials. There's a lot of things out there that are moving. And so it's, but that's the downside, is that there's a lot more to look at.
Yeah, absolutely. Well, since you brought up RSP and the Magnificent Seven, I feel like it's only fair that we kind of do a little compare and contrast. And I really like what you said uh, earlier this week about how kind of the ideal situation after such a strong week last week would be a little pause, right? Yeah,
Hmm.
and it feels like we got that to a certain
Yeah.
degree here on the Nasdaq. Some tight action over the last few days, popping out a little bit again, not necessarily closing at the highs, but um, you know, on the breadth side, as you mentioned, there's a lot of areas that are kind of moving. So in comparison to like the Mag 7 or FNGS that we often look at, what's kind of your take right now on where the puck is headed, I guess?
I don't know, and it's also unclear, because what if some of the high beta names, which did start picking up, what if they start taking off? Will the medicals and some of the more defensive growth names, not that all the things like the biotech, some of those are pretty high beta too, but if the high beta tech names come up really strong again, will then some of the other names fall off? I don't know. Actually, one nice thing about this creeping up is that, we talk about often being aggressive but gradual, or aggressive but cautious, like doing it step by step, but it's been pretty easy to do that. And it's not like the market ran away from us. Okay, yeah, we had that strong rebound, But then okay, so sure, and maybe there was a couple of days where you were a little hesitant to get going, but once we got over the 50-day line, you could start building up, and you could keep buying stuff all this week and adding to your portfolio without the market getting away from you. So I think in many ways, what's been happening has been pretty ideal. I mean, I'm just so happy from where we were 2 weeks ago, where it looked like, oh man, everything looked terrible. But really, I mean, it's been a really nice rally so far, especially in terms of just adding exposure. So that's certainly been helpful for me.
hmm And I neglected to mention the Dow Jones Industrial Average. That was also up for the day about 0.2%, but closing off the lows. That is also very close to highs. Um, I guess the big news for next week, a lot of eyes are going to be on the Fed meeting, and this week we saw some data start trickling in. That is a little bit late, but better late than never, I suppose. And the 10-year Treasury yield, I'm going to go ahead and throw that up real quick. What's kind of your take on how folks are viewing the Fed rate and also just the Treasury yields in general?
Yeah, I mean, I think the markets are pretty locked into a Fed rate cut, but sometimes when the Fed cuts rates, Treasury yields rise, especially on the long end. So I mean, the economic data this week was mixed, but there was, some was soft, some was a little stronger, but nothing that changes the perspective that the Fed is going to cut at least this one more time. We're going to look. It's going to be important to see what the Fed says and Powell says, but we also have to know that by mid-May, Powell is out, and there's going to be somebody else in there. And I think that's one of the other issues is that the front runner for the Fed, Kevin Hassett is, there's maybe some concerns, whether justified or not, that he's going to be too aggressive or that there's going to be seen as not independent. I think he's trying to do some rhetoric today, trying to sound a little bit more independent. But I think that may be where some of the yield is coming up, where it's just like, I don't know, don't want to get, but we'll see. I mean, again, I don't want to make too big of a point over a 10 basis point move. The treasury yield is still sort of in a downtrend. I mean, we're not
Mhm.
even over the November high. So, I mean, this is this is like one of my if your child says dang, you say, all right, my child is going profanity laced tirade. I got to stop this. It's like, it's 10 basis points. We'll see if it moves sharply from here, then we have something to worry about.
Yeah, no, that makes sense. Let's take a look real quick at some of the sector moves before we get into stocks, because it did seem like there were a lot of things, again, setting up, following up from last week's move. So it was, uh, yeah, as you said, there was plenty to do, but you didn't have to feel like you were necessarily in a rush.
Yeah.
And in this case, I'm going to go ahead and start with some of the best first for the day at least. And or actually, you know what? I'm gonna mix things up a little bit. I'm gonna go with the best for the week.
It's fine
And
with me.
actually, what?
I think this week that makes a lot of sense because we didn't not a whole lot happened
Yes,
today.
yeah. So I'm gonna start with IGV software. Now, again, this was kind of clobbered by the likes of Oracle, and Microsoft, and those are still kind of recovering on the recovery path. But this is coming up to the 50-day moving average line. So that was actually, again, sometimes the things that are hardest hit are the ones that bounce back the best.
Yeah,
In your mind?
definitely so. Yeah.
Yeah. And then
Yeah.
uh, one of the things that kind of also struck me was that jets, this has a lot of the airlines, a lot of the travel companies actually. I was noticing things like Expedia and Booking that were kind of setting up. Even Marriott seemed like that was doing well until all of a sudden it didn't. But let's talk a little bit about jets and what's going on there.
Yeah, I mean, it just seems like all of a sudden there's some travel going on. I mean, oil prices are relatively low, so that's probably helping on that concern because that's always one issue. Uh, it always seems like airlines go on these short runs, and I never seem to play them right. And I missed this. I didn't board a tick the board while it was still going. But we'll see here. I mean, it is nice to see. It's a sign there seems to be some signs of consumer strength that didn't seem to be there a couple of weeks ago.
And related, the transportation average. This is the iShares IYT. That's been looking a little bit stronger. Of course, a lot of jets are in there, but it also has the likes of some of your truckers like JB Hunt and your railroads and so on. Another big winner for this week was the chips. So it seemed like even though it's not necessarily all AI anymore, chips definitely were participating this week.
Yeah, and it's interesting because Nvidia, while it did rise this week, it's still below the 50-day line. So it definitely made a, it advanced. It's sort of maybe setting up to get toward it, but it's not there. But SMH is doing very well, and that's, I mean, there's Broadcom. Broadcom earnings are probably the big. That may be more important than the Fed,
Hmm.
because we sort of know what the Fed might say. Certainly, what the Fed's going to do. We don't know what the Fed's going to say. But Broadcom earnings. There's some other AI earnings, but that's been doing well. Not necessarily lighting the world on fire this week, but there were definitely a lot of names. So yeah, so SMH doing very well. One of the nice ways to play it with Nvidia below the 50-day line, and some of the other names like Broadcom maybe a little extended. SMH is not a bad way to play the chip sector right now.
Yeah, and then also another area that was of interest, and you're going to talk about JP Morgan a little bit later today. KBWB, this is the bank ETF. This has, had a good week, especially on Wednesday. What's going on here with the banks?
Yeah, I mean, I think maybe there's a bit of a wider spread. That's always nice for the short to long end. I think so. Even the regional banks, I think if you punch up KRE, which has definitely not been doing as
Hmm.
well, that has picked up, I think, recently, because that one was lagging for a while. I'm not saying it's lighting the world on fire, but it's coming back. So that short long spread is improving. Just maybe general sense of stronger economy for whatever reason, whether you think it's Fed rate cuts or just what have you. There seems to be, whether you look at the transports, you look at retail, you look at the banks, and they're all suggesting that the economy, is going to improve or is in better shape than maybe we thought a little while ago.
Hmm. Another area, you mentioned metals, and one of the metals that has kind of caught people's eye is copper. And SECO is one of the members of Leaderboard right now. But what's going on with copper?
I mean, again, people often call copper Dr. Copper as a PhD in economics because it's such an industrial metal. This is a sign, especially of the goods economy, manufacturing around the world, that there's demand. And that huge drop there was some weird stuff about with tariffs going on. So that's a U.S. price. The global prices, I think, are at record highs out there. But yeah, again, another sign that there's strength out there, yeah, especially in the goods manufacturing sector that didn't seem to be there before.
Hmm. And speaking of strength, ARC Innovation, ARC K, this is still below its 50-day moving average line, but again, it had a pretty good week this week, up 2.8%, and it kind of goes to show that there's still a little bit more of that risk appetite increasing.
Yeah, so that's coming up. That'll be an interesting level. This number of names that are high growth, that kind of thing. I mean, Tesla came through. That was a big name. That's ARC's biggest holding. So ARC isn't above there. So Tesla made a nice move, and it was just, you don't know when they get up to the 50 line, will they move through or not? And but Tesla did. ARC has not quite done it, but yeah. And what's nice is that ARC is coming up, but we're not seeing the other names come up. We're still seeing the medicals. We're still seeing the other stuff. It's not like there's only so much oxygen, and oh, the high beta names are coming in. Everybody go back out of the
Hmm.
pool, because the high beta kids want to play again. So it's just adding to the breadth. So it's again very encouraging.
Yeah. And XLK, again, as you said, it's not like tech isn't participating here. It's not like it's all these defensive areas. Tech had a very good week this week, up 2.4%. For those that may have panicked, there was a 2-for-1 split here, so no, you didn't get knocked down 50%. Uh, if you had this, there was a 2-for-1 split in a number of these sector ETFs. XLK back above its 50-day moving average line.
Yeah, I mean, looking good here. Doing exactly what you wanted. So it was lagging a little bit, but coming on again.
And I also wanted to spend a little bit of time on XRT retail. Again, you mentioned a little bit before that there's some signs that the economy is maybe a little bit better than people thought, and a lot of folks were thinking, okay, consumer discretionary retail was really kind of struggling, and you can point your finger at whatever you want, but it does seem like there's a little bit more strength to be had here.
Yeah, it's and definitely pockets of strength, some
Yes.
discounters and apparel retailers, but there's a number of them. I mean, it's not just one or two. Dollar Tree, there's Five Below, American Eagle, but there's probably like 9 or 10 that you can easily say, "Yo, those are doing really well." So definitely, again, another sign of that of encouragement. There was a lot of optimism about the holidays, at least among these leaders. Now, there's some others that maybe not, but yeah, XRT isn't at highs, but that's overall trending higher and looking pretty good.
hmm QQEW, again, kind of showing this is the equal weight NASDAQ 100, almost at highs, off its highs a little bit today, but still very close to those all-time highs. XLE, whether you look at the explorers and producers, some of those were having a good week this week, but a little bit of a reversal today as it started, coming up to that 46-45 resistance area.
Yeah, a lot of energy names in this, and there's some better names. There's other, this is dominated by Chevron and Exxon, but there's a lot of other names that are doing better. Some refiners, some services, and then a lot of natural gas plays that are doing well beyond some of the AI related electricity producers. So energy broadly had a pretty good week.
hmm Running through a few other areas, XLC, which is dominated by Google and Meta, that's tracing out a little double bottom here. Meta seems to be giving a shot at its 50-day moving average line and 200-day moving average line after really getting clobbered earlier news this week of job cuts and I guess was it job cuts or just spending cuts on
Spending cuts
Metaverse?
to the Metaverse project, which never
Yeah.
seemed to be, that was something that Zuckerberg cared about, and nobody else seemed to. And so people were happy to see that. It's like devote all power to the AI, not Metaverse.
Yeah, and then XLY also, as we mentioned with retail, consumer discretionary, doing fairly well. Q's had a good week. Again, this was up, up a decent amount for the week. And SLX, you mentioned again metals. We talked about copper, but steel has been also getting some attention here. Not a great day today, but for the week, still doing okay for the week.
Yeah, I mean, again, yeah, so nice to see that movement. There's even some foreign ones. It's not just tariffs that are helping the local steel makers. It seems to be overall. So again, just big cyclical names are doing well, and cyclical names rise when you think the economy is doing pretty well. So that's what's happening here.
hmm And then, as we mentioned with banks, XLF having a decent week. And again, we went from best to worst. So now we're getting into those that were up maybe less than 1% for the week. XLI, the industrials, that was also up for the week, but really close to those highs from earlier, just a month or so ago. SPY, as we mentioned, that's almost at highs. FNGS and RSP that we've already talked about. Let's spend a little bit of time on XBI because this is just an area that doesn't seem to be, giving up anything at this point. And I do have a position in XBI myself, but yeah, this has been trending really nicely along the 21-day moving average line, despite what was going on with the general market.
Yeah, it's that's been really impressive, and I wish I'd gotten into this a couple of times, and I stepped away. I do have some exposure to biotech sector, but this is looking very strong. There was some news this week that the FDA might reduce how many clinical trials you need, and so that provided another boost late in the week. But this has been just rallying on a lot of news, and you can find a lot of quality names in this space for sure.
hmm Um, Gold. I actually did a column this week on GDX, but this was looking a little interesting earlier in the day, but ended up reversing. Um, what's happening with gold? I mean, it's still basing, but a lot of people were thinking, well, gosh, this move that it had over the summer. I mean, there's no way that could be sustainable, but it certainly doesn't seem like it's necessarily done yet.
Yeah, it doesn't seem like, and if you go to GDX, I think that one has been stronger. I mean, the miners tend to outperform to the upside and downside. Some have gotten extended, some have not. But, honestly, that looks pretty good. Now you're getting a pullback. If you didn't get it bouncing off the 50-day line, you can buy things. There's some handles forming on GDX and GLD, and there's some individual names in there. So whether you go with the ETFs or go with individual names, this might go again. I mean, the Fed meeting could send a big move either way, but yeah, this has been just a really stellar area all year.
hmm Now, of course, staples, which you typically expect to do a little bit better on the defensive side, that's still below its 200-day moving average line. So even when we were going through our little pullback here on the market indexes, XLP still didn't get enough strength to really kind of move the needle there that much above the 200-day moving average line. It did get above the 50, where it still remains, but still, not. This is definitely not sucking the air out of the room, as you said.
Yeah, no, even when the market was doing poorly, this really wasn't making real progress. That RS line has been really weak. I mean, modest gains here and there and then falling off. This has not been a place to be.
Yeah, and this is despite, if I'm not mistaken, Walmart, I think, is one of the big
Yeah,
members
the
here, and
retailers, I think, because people are going down. So it's not so much, it's probably more the food, I'm thinking, the packaged food, and just that's where
yeah.
probably some margins are getting squeezed. But whereas Walmart and TGX and those folks are probably getting customers that are higher income to move down to them and are taking advantage of that. But yeah, that's I think what's going on.
hmm ITB, we talked a little bit about the 10-year Treasury yield, which of course is tied to mortgage rates to a degree. That had a really strong looking day on Wednesday, but unfortunately couldn't hold on to the gains. Um, there still are some pockets of strength here, some things that are holding up a little bit better. One of the earnings reports that came out this week was HOV, and that really got clobbered. What was that, down 20% yesterday? But overall, what's your take on ITB and the home builders?
Yeah, I mean, I think there's some excitement about maybe you're going to see, probably on rates, but if Treasury yields rise in the wake of the Fed, that's not going to help. I think that's part of the reason the Treasury yields continuing to rise. That would be an issue. And I guess I'll be curious. Toll Brothers reports next week. They're a luxury builder, so they're a little bit more insulated because the higher end income folks are in better shape. I mean, as they usually are, but with the stock market high and if eggs are up a little bit more expensive, it doesn't hit the rich so much. But Toll Brothers, it'll be interesting to what they say about labor costs, what they say about other costs. Are they really seeing pent up demand beyond interest rates? So I think that'll be an important report for the housing sector.
hmm Makes sense. Um, FFTY, which actually does have a lot of gold exposure right now, that did get clobbered, but it is trying to get back up to its 21-day moving average line, still below its 50-day moving average line. So yeah, still has some work to do here.
Yeah, and it sort of shows you that while ARK is moving up there, but that sometimes there's a few specific names, like Tesla's such a big name in ARK, that's
hmm
helping, and they have some other things, but it does. So there's still some damage in high beta. I mean, yeah, there's a lot of gold in here, and there's a lot of names that are not high beta names, but it does shows you that there's a number of things that are still below, and you want to be above the 50-day line. And the fact that this can't get above the 21-day line isn't a great sign for that field.
hmm Yeah. And just rounding out again, some of the stock or some of the groups that were hit this week, XLB, the materials, that was down for the week. Another one that had a 2-for-1 split. So again, just be aware of that. XLRE, which is the real estate ETF, this one's still hovering right around its 50 and 200-day moving average line. They're almost intertwined at this point. But one of the big moves down here was IBIT. Bitcoin still really struggling. I mean, it had a couple good days this week, but overall, still down considerably.
Yeah, and it's hitting resistance near the 21-day line. It's done that for a few weeks, and so that it didn't have a good close. It's nice to see because that was one of the culprits. People said either blamed it or put it next to it or or they were both falling. So it's nice to see that the broader stock market didn't really seem to get hit by Bitcoin, but that's something to watch.
hmm XLV, the medical or healthcare space, I should say, that looks like it's you pull back to the weekly here, it looks like it's just building a handle. So definitely XBI, the biomed biotech ETF, a lot stronger than healthcare. This didn't have a great week. What was dragging this down?
Well, at least when think of big pharma. I mean, like Lilly is down for 7 straight days. Now you could say that's a constructive pullback, but that's a pullback,
hmm
and it hasn't yet. Maybe it bounces off the 21-day line, maybe it doesn't. But Merck, was down, has shown similar action again after a big move. So those are a couple of names that I can think of. I didn't dig through all of it, and it could be that some of the positive FDA news. I mean, that may not be great for Lilly. If this
Right.
means that we get a rival obesity treatment, say, or rivals, so these established companies. Again, I don't know how that all plays out. I mean, you'd have to look at individual names. Which ones have all these drugs that are under threat? Which ones have trials that could be benefiting from it? But uh, I suspect that's what's going on. I mean, it's a sort of a well-deserved rest for some of these names,
Hmm.
but yeah, not a great week for them.
Yeah, to your point, VKTX, they're working on some of that obesity drugs, and this one had a fairly strong reaction to that. And then again, just rounding out the sector ETFs, the worst for the week was XLU. This one is back below its 50-day moving average line, whereas this has had a lot of kind of that AI adjacent stuff helping out. Overall, it just wasn't enough this week, so this has been pulling back and undercut recent lows, but coming right to the top of this base here from September. Okay, let's shift gears a little bit, and we will talk about some individual stocks, and we can start with Penumbra. This is in the medical space, medical products. I do have a position in this, and we also put this on Swing Trader this week, but what's your take here, Ed?
Yeah, I mean, there's a clear buy point of 301.01 handle. It's not going to show up on market surgery, but there's that clear handle there. It got above there for much of the day today. Just pulled back just below it, but I think you could still be actionable from breaking the downtrend of the handle. You could have done that earlier. So it just seems to me pretty clear there. Uh, we saw the revenue growth pick up this time. I'm not in love with this space, I'll be honest. And that's one reason I passed on it, even though it's acted well. But if you go to a weekly, this is when it's had some ups and downs, and I'm not super thrilled by this. And the RS, I would love to see a longer handle or a base on top of this, but it's shown a lot of strength the last several weeks, ever since the last earnings report. So that would be the other thing. I'd just like to see it settle down because it's been rising all this time. But I really like this action, and we're seeing a lot of medicals. You can see it has pretty solid growth, out there. It wasn't impressing Wall Street for a while. It had some big numbers, but the market didn't like it. But now it does, and
Hmm.
but the fundamentals are pretty strong here. Look like they're going to be solid. I mean, not amazing revenue growth, but pretty strong earnings growth, especially after a couple of quarters, maybe after one more quarter of like okay numbers, should be some really strong numbers. So yeah, I like this. I like this name, especially in the last couple of weeks.
Hmm. Yes, and on Swing Trader, we did get this yesterday
Yeah.
as it was reversing and kind of
Hmm.
getting a little bit of a boost. So we got this earlier in the day, and already we're up on it. By the end of the day, added to it a little bit. We've been starting our positions a little bit smaller just because we had so much. I mean, look, November was not great, so it was one of those things where it's when things aren't working, you don't just start putting more and more chips on the table. You kind of scale back a little bit and then let the market tell you when it's the coast is clear and it's safe to poke your head out again. So that's the way we handle this on Penumbra. Let's also take a look at one of the big leaders of the year that everyone has been watching is Vertiv. So again, on this AI side, some of these looking like they're on the comeback trail.
Yeah, a few times it looked like it was flashing early entries, then pulled back a little bit, after it got above the 50-day line, but it's now clearly above short-term highs. It's still relatively close to the 50-day line. It's above the November 20th high, that downside reversal day that really sucked, really made everybody feel like things were going to be terrible, and then immediately turned back. But this one came back very quickly. So this is acting well. I will say that today's action could be a bit false or a bit premature because there later today, very soon, the S&P Global will announce rebalance for the S&P 500, and a lot of people are talking about Vertiv as one of those that could get in. It gets in, it probably goes up another 5-7%. I don't know. I mean, but if it doesn't get in, it could fall 4%, or at least just give up today's gain. So, I mean, I don't know too many people who are trading after hours right now thinking about buying it, but so it's probably not going to hurt anybody. But definitely could. There's a good chance this one will make a big move on Monday morning, up or down, depending on what happens in the next few minutes.
Hmm. Yeah, no, that
Uh,
makes
But uh, but uh, but but growth is strong. You saw the earnings pick up. Last quarter. The revenue growth had been sort of tepid for a while, but really picked up again. it's just a big player out there. I mean, there's so much data center out there. This is a great way to play it. They're NVIDIA partner, but presumably they work with others as well. And, so they're doing very well.
hmm And just touching on a little bit of everything, we got medical, we got the AI space, and let's end with financial. JPMorgan, closing down for the day, but this was a lot of these were kind of retaking or coming right back to these previous areas of resistance. So it'll be a matter of just seeing how they finish out here. Do they overtake that, or do they get turned away?
Yeah, and I think you could use that 318 as well, or you could use 322.25 either way, especially if it bases out longer. Came right up there. Now, what you did on Swing Trader with Goldman Sachs, I think that was probably a better play, but that to me at this point seems a little more extended. I mean, there was an opportunity a couple of days ago. You could still buy it, but it just feels like it's a little more out there. So that was the better play. JP Morgan is very close though, or you could use one of those ATS like KBWB. But JP Morgan, again, it's a steady performer. I say JP Morgan and Goldman Sachs are basically like when you think about banks that are generally steady performers over time, the best in breed. Those are the names. Yeah, JP Morgan still acting well.
hmm
Economy is still doing well.
I'll throw Morgan Stanley in there too,
Morgan
just to make it a
Stanley's up
trifecta.
there. There's a number of names that are out
hmm
there that are doing well. There's a lot of foreign banks too. I couldn't believe it. Leaderboard's like, we're going to put this Peruvian bank on. It's like, what? BAP, but that did
Yeah,
very well.
right.
Then it surged up and it pulled back, but but acted fairly well here. So again, there's a lot of foreign banks out there that are doing well. This is just a stronger area right now. So definitely people should be looking at. This is what I'm talking about where there's more homework. What? I got to look up Peruvian banks
Right,
now?
exactly.
Come
Right. And I
on,
mean,
it's like, yeah, but
and for a while there, we were looking at,
oh wow, that
this
one
Brazilian bank.
I did
This
not
got hit a
see
little
that
bit.
move today.
So yeah, again, it's there are other factors to look at with some of these. And yeah, it as you said, it does require a little bit more homework. But I will say that one of the ways I do my homework is I read your futures column over the weekend. For folks that haven't caught that, if you go to investors.com, a lot of times you'll find Ed's work right on the homepage because he's one of the few people that is like, oh yeah, sure, I'll give up my weekend and just watch what's happening in the market all the all the time. So
I live a
um,
rich and full life, don't I?
right, exactly. Yeah, well, in your head, but. Just to kind of wrap up what we looked at and what's coming up. So in addition to the Fed, anything else? I mean, earnings. Uh, Normally I tout your earnings cheat sheet that you do with Alexis, but there's not much to really do there. There's still a number of S&P 500 stocks that will be coming out in the next couple weeks. You mentioned, some of the home builders that will be coming out, like Toll Brothers and others. But anything that we should be on the lookout for in addition to the Fed meeting next week?
Well, Broadcom, as I said, and then there's also Oracle. I think that's a big deal. Oracle the stock has not been doing well, but I think people want to hear about that. It's like there's just some questions about will all this stuff pay off? Like, is Oracle making money off of this? Can they finance all this stuff? All these data centers, and that plays into a whole bunch of other companies. So if they can allay fears, I mean, you may not want to buy this, but there may be a whole bunch, maybe Vertiv jumps on that news. Who
hmm
knows how those kind of things. There's also Sienna, which has really come on. That's a fiber optic play that gets into AI. So that's been basing. So that one could be interesting. So those are some of the bigger names that I think that could really move the market. But yeah, after that, there won't be too much. I mean, there'll be some trickles that are coming in, but I think those are those reports along with Toll Brothers are what I'm going to be looking at along with the Fed.
And just as a reminder for the S&P 500, the broader market, we have really checked off a lot of the boxes. Starting last week, we were asking, okay, can we get back above the 50-day moving average line? Can we get back above the 21-day moving average line? We did that last week. We also cleared that Thursday,
Hmm.
November 20th high in a lot of the indexes, and now we are. It's one thing to get above those levels, but it's another thing to stay above those levels.
Yeah.
So I'm a little heartened by the fact that we are continuing to make progress to trend above those moving average lines. So I guess there's kind of two camps. There are those that maybe didn't do much selling through all of this. They're like, oh well, I've got long term gains that I'm looking at here. I've had a good year. I want to see if I can get a little bit more. I've got cushion on my stocks. There might be those that were more on the swing trading side that got knocked out of everything. I was very light in my portfolio for a lot of for a lot of my accounts. So I guess ramping exposure back up. We did get down to 0 to 20% in our recommended exposure on the big picture. So in what ways should we think of, or should folks be thinking of ramping that exposure up?
Well, I mean, hopefully people have done some picking up. I mean, doesn't IBD is suggesting 60 to 80%. You can be a little higher than that. You can be a little below that. But again, as I say, like if you can, when we talk about gradually, like 10% a day, and there may be certain days when you get more aggressive. If you're more aggressive, you have to be ready to get out quicker if things
Hmm.
don't work out. But once we got over the 50-day line, and especially above the November 20th high, people should have been adding exposure. So once you do that, and there were definitely things to buy, but if you do 10% a day, 10, 10, 10, I mean, not every day, but it's like maybe a couple days, 5% or something, but you could easily have gone from 10% to 70% without being
Right.
rushing in. You're just like, hey, I'm finding stuff to buy because that's how this market has been. I'm finding stuff to buy. Things aren't going crazy. I go, oh, look, there's this financial. Oh, look, there's this medical. Oh, look, hey, this stock is moving back above the 50-day line aggressively. So I think that's the way this has been. Again, I think this has just been really a positive couple of weeks, not just because, yeah, the gains have been great, but I think it's been a really easy market to add exposure. There have been stocks every day that have flashed buy signals. They've generally worked. I'm sure there's some that have fallen back. But it's again, we didn't race up where you feel like everything's extended before you had a chance to step in. So whether you were held a lot of things or you were a swing trader or somewhere in between, I think there's been an opportunity to be solidly invested. Just keep on working on watch lists. If you have some laggards, you might be looking about cutting them because some stocks are not participating as well. Cut them. Look for if you see something better that you want to add. If you don't want to beef up your exposure net overall more. But again, I think this is just a really positive market. As long as this trend continues, you can sort of gradually build it up to the level that you're comfortable with. And hopefully we have a long Santa Claus rally that
Right.
comes early and lasts longer.
Yeah. And I would just add that, one of the things to remember, especially if you were like myself, I was starting off with some smaller position sizes to
Yeah.
kind of test the waters initially. Don't think that you have to start with brand new positions. You can add to the ones that are working. That's a great way
Hmm.
to use the market as a feedback mechanism, to let it decide, okay, here are the things that are working, here are the things that are not. You take the money from the losers, put it into your winners, and that's how you can build a larger position and make those stocks, when you're right, make a difference,
Yeah.
in your portfolio. So thanks a lot for all of the commentary there, Ed. I hope you have a great weekend, and I will be looking forward to your futures column, as I'm sure many of our folks will. But thanks a lot for the commentary.
Thank you, Justin.
And that's going to wrap it up for us this week. Thank you so much for watching, and we will be back on live at IBD Live in the morning on Monday. I'll be hosting that show, and we usually start 10 minutes before the market open, and we go a full 90 minutes in to kind of get you started with your day and what happened over the weekend and what stocks are setting up. It's a live look at the markets. So hope you join us for that if you haven't already at investors.com/IBD Live. You can also catch us on the Stock Market Today video. At the end of the day, we're going to have also Jim Ropel coming on to do his monthly market report next week. So that's going to be very interesting to take a look at. We're going to have Jeffrey Hirsch on the podcast from Stock Traders Almanac. And then, as always, we have a whole host of special guests on IBD Live, as we typically do on Fridays, including our regular special guest, David Ryan, on Tuesdays. So a lot of stuff going on here. Hope you can join us for some of that, and hope we can help you make some money in the markets. So that's going to wrap it up. Thanks a lot for watching. We'll see you next time. Bye now.